Welcome back. This week is largely about tech earnings for investors. 5 of the big 7 tech stocks, those stocks we used to call the Magnificent Seven, will report earnings before this week is over. And they come at a time when the NASDAQ Composite Index has surged to new record highs. Our next guest is bullish on Microsoft, which reports later today, and Amazon, which reports tomorrow. For more, let's bring in Tony Ciero, Vice President and Senior Portfolio Manager at Caldwell Securities. Thanks for coming in, Tony.
Thank you, Paul.
Why don't we take a crack, first of all, at the Alphabet earnings. We do have an RBC analyst coming up later in this program, but I'd love to hear your thoughts on the company that's kicked off this round of large cap tech earnings.
Yeah, absolutely. Alphabet did extremely well. Still the number 1 search engine out there, but what drove earnings was its cloud capabilities, the Google Cloud Platform. And that's a good prelude to the potential of the Microsoft earnings, which we're really bullish on, as well as the Amazon earnings. So the cloud computing capabilities have really amped up the revenues, and investors are rewarding them for it.
What do you expect to hear from Microsoft, and what do you want to hear from Microsoft?
Well, what we expect to hear is similar to Alphabet's, their Google platform. Microsoft is the Azure cloud platform, which is the leading AI capability out there. So we expect increased revenues there. Keep in mind, last quarter earnings, that area was not to the investor standards, and Microsoft tailed off. But this time around, we think it'll catch up. Roughly speaking, Microsoft is about 10 points behind its index. And we think after the earnings today, or later today, we think there's a catch-up to be had.
How much concern is there among investors on capital spending on AI, which has caused concern in the recent past?
Yes. There's definitely a concern there. And if you see, Microsoft were one of the initial investors in OpenAI, the developers of the ChatGPT, spending billions of dollars there. So we think that's coming to fruition now. So we expect to see a good earnings, as I mentioned before. But again, last quarter, investors weren't too satisfied with the capital expenditure there compared to the earnings that it generated. Microsoft as well, it's not only about the cloud computing capabilities, it's also about its office structure. Microsoft Office, which has 1 billion users out there, that has a nice revenue floor set in there. So we expect a little uptick there. Overall, we think Microsoft will do quite well after earnings today, and we'll see a catch-up in price.
Satya Nadella is the CEO of Microsoft. He's been there for about 10 years. It's been a great 10 years. I think he gets applauded by a lot of people, particularly compared to his predecessor, Steve Ballmer, who did not guide Microsoft really to new highs. Does the market want to see Nadella stick around?
I think so. I think so, absolutely. He's been very good for the company, especially into the new initiatives. And as I mentioned before, being one of the forefront investors into the OpenAI, into artificial intelligence space, definitely will help out the company.
Okay, Amazon delivers results tomorrow. It also is a player in cloud computing and artificial intelligence. AWS is the offering there. There's the stock price, which has done very well recently. Same question. What do you expect to hear from Amazon? What do you want to hear from Amazon?
So similar to Google and Microsoft, AWS, Amazon Web Services, we expect increased profits there. Spending a lot of money as well on capital expenditure, and it thinks it's coming to fruition now. Also, Amazon, similar to Microsoft, has this floor of revenues. They have over 300 million users and average over $1 billion sales per day. So that's going to add some nice revenue floor to the earnings. And on top of that, we think, yes, again, the cloud computing capabilities will be able to give a lift on the stock price.
So I assume you believe that investors should be owning some of these stocks.
Yes.
Let's talk about how many, and how much exposure is the right amount of exposure.
That's a good question. It's always rated based on the client's risk preferences and their tolerances. These are volatile stocks. Now, Amazon gets lumped in with the Magnificent Seven, which is tech stocks, but it's really a consumer discretionary. And I would argue it should be a consumer staple because a lot of people use it for everyday household goods. So you should be wary on your risk tolerances. I don't want to give a number, but in our portfolio, say a balanced portfolio, balanced strategy, it's anywhere between 1% to 2% in each one of these names.
Right. So that's, I think I'm guessing that's smaller exposure than a lot of retail investors might assume if they just go out there and do it themselves.
Exactly. If you're looking to load up your portfolio on this, you have to appreciate the volatility in this stock. Amazon in particular, keep in mind, before the July mini crash, it traded around $200, dropped to $160 within a week, and that's a 20% decline. If you held on, great. You've made up some of the losses. We're still a little bit behind. But you need to ride those ups and downs. So a diversified portfolio is what I strongly recommend. And having 2 staple names, U.S. companies like that in part of the portfolio, makes sense in my opinion.
That's Tony Ciero. He's Vice President and Senior Portfolio